Okay, how's it going today, guys? So today I wanted to do a video reviewing market internals and how valuable it can be to add to your trading routine. So basically, what I did here is I created like a little document, just like made a bunch of notes, and then eventually I'm going to put this into like a PDF for you guys to reference to later. So if anyone wants a copy of these notes or wants a copy of the PDF when it's done, just let me know and I will be glad to send it over. So let's get started with ticks. Right, I know if some of you in our chat room, we talk about ticks a lot, right? And today, right now, the market's really hot. Ticks have been hot all day, so we're seeing strength in the market, and the market internals are backing that up, right? So you want to see the market internals agree with the up move, right? When the market's moving up and ticks and the rest of the market internals are not agreeing with it, that's time to start being cautious, okay? Conversely, if you're in a net short position and the market's going down and the internals look like crap, then you can expect it kind of backs up the potential of further downside. Now, if the market's going down and the ticks and the rest of the internals are starting to go up, then we might be starting to slow down. Selling momentum starting to slow down, and we might be heading back up here soon. So definitely something that I think everyone needs to add to their trading routine, or at least something that they check periodically throughout the day. And that's something that we go over almost every day in the chat room. So let's go over ticks here. So ticks is basically, it's the direction in which the price of a stock moved on its last sale, okay? So an uptick means the last trade was a higher price than the one before it, and a downtick means the last price was lower than the one before it, okay? A 0+ tick means the transaction was at the higher price as the one before, but still higher than the nearest preceding different price, okay? So a 0+ tick is not used in the calculation of tick, okay? So here's just I took a little picture here of what the ticks might look like if you're using a PC, okay? I've got my -1,000, -800, and +800 and +1,000 marked off on there, okay? So, on most charts, you'll see, what I have there, the 800 and the 1,000. The usual term for +800 is high tick, and +1,000 is extreme high tick, and vice versa on the downside. So these are outside the regular range and indicate somewhat of an extreme, right? Now this is neither bullish or bearish. It's just, like I said earlier, it's an indication of where the market is heading overall, right? So, if the market's moving up and you're seeing ticks flat to down, and you're long, you should, be kind of cautious, right? Because the market is not agreeing with the current move up, right? It's kind of basically being propped up by a handful of maybe bigger stocks, while the rest of the stocks in the market are going down, okay? Now, in some instances, you might see extremely crazy tick levels like -15,000 to 18,000 or 1,800, which we actually saw last week on Monday. And usually when you see that, that's like extreme readings, super oversold, capitulation. We're maybe starting to reach a bottom and we might bounce back. And that's exactly what we saw last Monday. If you look at the chart, I mean, SES was in like the low 4,200s. And then from there, we bounced a good 100 points from that spot. So we were watching the ticks very closely throughout the day. And as soon as we saw that, we made note of it and we started scaling in some longs, and it paid off big time. So again, ticks are very important. All right, so then you also have the cumulative ticks, tick C. This is based off of the entire New York Stock Exchange. So this is a net of ticks on the NYSE. This is not intraday. This is not an intraday indicator, but more of a general sentiment over the past sessions, right? So it's not like currently going on. It's kind of like a a collection of the last few sessions, right? So I use it above or below 0 as an indication of market momentum, and then also the slope and the Keller. So you can see that here, marked 2 here. Okay, so pretty red on the day. And then you have the ADSPD, which is the difference between the total advancing issues and declining issues. So if it's higher, more stocks are gaining than there are losing, right? So for a trending market, a value above 400 is usually seen based on my experience, okay? So this is a little snapshot of that, the ADSPD, trending up here. So showing that the market is, trying to trend up here, okay? And I'm going to go over these here on my mobile version here in a second. The VIX, obviously, that's a measure of the market volatility or the fear gauge, right? And this is just, the VIX is calculated using a formula to derive expected volatility by averaging the weighted prices of out-of-the-money puts and calls, okay? So if a bunch of people are buying puts as insurance, you're going to see the VIX go up, right? As VIX comes down, people are taking off hedges. They're not expecting much more downside, right? So when you start seeing the VIX pull back and breaking key levels, that's a good sign for the bulls, right? And here's just a little snapshot of what the VIX looks like. I'm sure most of you have actually seen the VIX before. There's also Tick Q, which is specific to the NASDAQ. So, it works similar to the other ticks, so I don't need to go into any detail here. VOLD, okay. So here's a little snapshot of that. Okay. VOLD is the difference between the up volume and the down volume on the New York Stock Exchange. So it's UVOL minus DVOL, the net up volume, okay? If you consider that VOLD is the net value between UVOL and DVOL, then you need to understand these two to understand VOLD, right? So UVOL or DVOL are a total of the volume on all stocks that are up or down in price, okay? So UVOL, up volume, DVOL, down volume, right? So up or down is based on the previous session's closing price, okay? So the size of the stock's price change is irrelevant. It could be up 2%, it could be up 0.1%, right? If the stock is only up 1 cent, then its volume is grouped into the UVOL total. If that stock's price then drops by 0.02 from there, now it's down 0.01 on the session, and the day's volume for that will now be grouped in all with the DVOL, okay? So you can see how this can change constantly throughout the day. So that's why it's important to kind of look at it periodically throughout the day. As the market's moving up and you're long, just are the market internals still supporting this move up? Yes. And then when they start to maybe turn down, maybe it's time to exit your longs. So note that when a stock moves from being an up stock to a down stock, its volume will be removed from the UVOL total and added to the DVOL, right? So let's say the stock's volume is 1 million shares when it moves from up to down. The DVOL will then increase by 1 million, okay? And the UVOL will decrease by 1 million, which means that the VOLD will decrease by 2 million, okay? And you also have the VOLDQ, which covers the NASDAQ, and it kind of works the same way as the VOLD, right? Same concept. So, VOLDQ is something you might want to look at specifically if you're specifically trading the NASDAQ or triple Q. Okay. Intraday Ticks. So Tick C, right? So this is a little different from the Tick C I showed above. In the previous internal grid, there are reset at 0 at the start of the day and then are developed as the day goes on. So these provide a clear idea of how the day is progressing and if more buyers are stepping up, right? So that's up here in labels 2, right? You see that right there? Okay. And then 3 here. Okay. And this one's for the NASDAQ. Okay. So like I said, label 2 is for the NYSE and label 3 is for the NASDAQ. Okay. All right. So breadth, which, is up here at the top here. just kind of showing you across all the sectors, how everything's performing, right? So the breadth is basically an indicator of how many stocks are above yesterday's closing price versus below them. Therefore, if you have a breadth of 3, this means that you have 3 stocks trading higher compared to each stock that is trading lower, or the breadth, basically 75%. So I use the NYSE, the NDX, and the RUT, okay? As expected, the higher the breadth, the stronger the market is trending in that direction. So just keep constant note of these. Like I said earlier, these can flip intraday at the drop of a hat. So we've seen that here in the last few weeks throughout the month of January. Market breadth indicators may forewarn reversals and uncover strength or weaknesses in the movements of an index that are not visible simply by looking at a chart of the index. Okay, so this occurs when the indicator diverges from the index. Okay, so the tactic for most market breadth indicators is to monitor for confirmation and divergence, and that goes back to what I was saying earlier, right? Confirmation is when the indicator is moving favorably and the index is rising. Divergence would be if the index and indicator are moving in opposite directions. So this warns that maybe a reversal might be happening here soon. Okay. Trin, I don't use Trin all that often, but I know some people find a lot of value in it. Basically, a trend greater than 1 means there's more sellers than buyers, and a trend of less than 1 means there's more buyers than sellers. Okay. Sectors is something that you can also look at. So how are the sectors performing? So you have the infotech, consumer staples, real estate, healthcare, materials, utilities, energy, financials. All the different sectors throughout the stock market. So it's just they're listed by their weightage in the S&P 500. So as seen in the image, when the biggest sectors are green, then you would expect the market to follow that. So this can also be used if if you're trading stocks in a particular sector, right? So which one's hot, which one should I be trading, and then lastly, one that I use occasionally is the put to call ratio. So the put call ratio of less than 1 means there's more people buying calls than there are buying puts. Okay, so readings over 1.3 indicate extreme bearishness and signs of possible extremes and oversold readings. Okay, readings under 0.6 indicate extreme bullishness and possible over-speculative behavior across the markets with overbought conditions. So, in both those cases, you kind of want to be careful. If you're short any reading over 1.3, I would be careful being short and maybe look for a counter trend trade. And then if you're long with a put call ratio of over 0.6 or under 0.6, maybe it's time to start being cautiously bullish because, things are getting a little overheated possibly. So the extreme ranges can possibly be indicative of reversals in the near term. Okay, so let's head over here real quick to the internals I have on my mobile. So VIX just absolutely getting crushed throughout the session, right? So, and that's just beautiful right there. We're below 26 here. You look at this here, making lower lows, lower highs, breaking below yesterday's low, breaking below that 8 EMA. Momentum indicators all curling down. Just looks good for the bulls here. Here's that put to call ratio I was talking about. So, pretty neutral territory right here at about 0.77. But, again, you saw here it was at 1.14. So, little extreme on that. Ticks were looking pretty good earlier. Looks like we're starting to go a little red here. Okay. So, we've had a couple of times where you had plus 100 readings on the ticks. Means a lot of buyers coming in, a lot of stocks ticking up. Okay, so it's kind of supporting this move up today. The Nasdaq's up big, the ES is up big today. Let's see, VOLD. So VOLD's been trending up all day, right? So that's supporting the move up today. UVOL, same thing, supporting the move up today. Advanced decline, that's another one that I use. Again, that one's moving up with the market today, so it's supporting the market. Let me check How are we at right now? Okay, not too bad. So 44.63. I mean, you can see what happened. I mean, we hit 4,400, actually 43.95 this morning, and we've been going up ever since. And you look at the market internals that I just showed you, that's been supporting this move up, right? So, you know, we have been going up a lot, but definitely not enough to short, right? You know, I know there's a few people out there that are just itching to get back in shorts, but as of right now, market internals are not supporting a short position, at least for me. So, you know, that about covers everything that we need to know for market internals, at least for now. Maybe I'll do another video later in the future that goes over more details. But if you guys have any questions, any further questions about market internals, feel free to let me know. Drop a comment in the comment section. Head over to our Discord. We just moved over from Telegram to Discord just because I think it's easier for everyone, easier for new members to come on. You can get access to multiple channels. So you can come on over there, ask any questions in there. Right now we're running a special. It's free for the first month. So come on over, check it out. Like I said, if you guys want a copy of those notes that I took on it, I'll be happy to send it over to you. But all right, guys, have a good day and happy trading.